All right, guys. We would like to apologize. So we had some technical glitch. So I think we are back online now. So I want to be sure that you guys can hear me properly. Just in case if I'm not really audible, just let me know in the comment section. I think that'll be better. Okay, so I believe we can continue now. Okay, so here on the weekly time frame, so we actually on to something giving you this upward direction, and if you guys can see right now, let me delete all this. So we actually moving within this same formation, right? You can see we have this upward movement. This is actually a symmetrical triangle. If you guys are very much aware with how symmetrical triangle is being formed, then this is a good example. So this is an example of a symmetrical triangle, something like this. So you could still see price pushing to the upside thereafter, but we're still expecting price to move to the downside a bit. I mean, touching this support trend line, this one right here, before the continuation to the upside. Okay. So, and at the same time, this is not just the only thing that needs to be watched out for. There are some uh, there are some things we also need to pay attention to, like the candlestick formation. So I will just delete this for now. And if you look at the candlestick formation, here at the resistance level, so you can see that we had these two rejected candle. I think this is three, the rejected candle. This actually was what made up the wedge formation on the daily time frame. I mean, on the 4 hours time frame. Okay, this was what made up the wedge formation. So you can see it's actually more of a confluence. We had this is a shooting star on the weekly time frame around the resistance, and heading down to the daily time frame, it's actually giving us a wedge formation. So something like this. So a wedge formation signifies a reversal from uh, an uptrend to a downtrend. It can actually appear at the support level as well, from a downtrend to an uptrend. Okay, so let's head back to the daily time frame. Okay, so you can see here on daily time frame. So like I said, we're expecting price to uh, push more further to the downside, right? Giving us a downward movement. And if we check what the 4 hours time frame is giving to us, here you can see that we had our uptrend formation. This was the moment where price was expecting structures, and a particular time where price actually broke out of structure, which is this point right here. We had the breakout. If you look at the previous session, you see that price was actually expecting structures. In an uptrend, the resistance is always have to be broken for the uptrend to continue. Okay, but uh, the support level must be respected. But in this case now, you can see that the support level were respected. You can see this was also respected. But at this point, price actually broke below the support level. And if something like this happens, it actually shows that price is actually ready to make some reversal. Okay, so we had our structure right here. Okay, here we had our previous higher low formation, and then higher high. Price came back down here to form another higher low, and then higher high. Okay, here it was most likely for market to make a new higher low and then a new higher high. But unfortunately, price actually broke below, and then we had this push to the upside. Okay, and then a continuation. So we are going to expect price to continue moving to the downside and probably give us some pullback like this, and then a continuation to the downside. Okay, so this is actually what we're expecting. Because of time, we would have delved more deeper to what we might be expecting on much lower time frame like 1 hour or 30 minutes. And this 1 hour time frame are time frames that we use for entries. So we have our own personal entries criteria that we must actually wait for the market to meet with our requirements before we place a trade. So this is actually what we have for you now on GBP USD. Heading down to the next market, we have the GBP card. Okay, so here on GBP card, you can see this is just as amazing as it is on GBP USD. So you can see that here we had a very good uptrend. So let's go down to the daily time frame. Let's see. So you can see that here we had a structural breakout right here, a structural breakout. Okay, and if you look at, normally we could have expected price to, actually we had a breakout and a retest, continuation to the upside. So it was a normal thing for the market to come back to retest and then continue like that until it gets to a particular psychological resistance. But you can see that in this case we had a breakout of this very strong resistance level, and price retested to make a new higher low formation, and then it continues to the upside. So now what happened? That this is the reason why before we started this session, I said market condition can change at any given point. So only a robot cannot detect a market changing. Okay, during the point where market is changing direction, it's difficult for robots to know those areas where market is changing. So this is the reason why human trader who is able to analyze the market professionally is the one that is able to determine when this market is going to change and when it's not going to change. Okay, because of course we would have expected price to come back down to make a retest and then look for a buying opportunity to the upside. Okay, which is a normal thing. But if you look at what the market is doing right now, based on how the market has been moving from and at the same time, this always having a bigger picture of whatever market we are working out on is very, very important. If you look at what is happening now, because market moves in cycles. Okay, this formation, this upward movement has already ended, and this was what gave room for this downward movement. Okay, and this downward movement, of course, is a correction. I'm sure you guys know, right? So this downward movement is a correction, and then it ended, and then it gave room for this upward movement. So they are all in cycles. Okay, it gave room for this upward movement, and then it got ended, and then this downward movement also started. So that one also got ended, and then we have this one already. Okay, you can see. So if a particular trend is ending, another one is resuming. If this one ended, then another one will resume. Okay, so this is how fundamentally this is how the market works. Okay, and at the same time we also see price coming to the downside like this, and this also ended. Okay, so if you look at this push to the upside, this is another movement to the upside, and here you can see that at the break of this previous structure, okay, I think I have to zoom out so you guys can see clearly. So if you look at this now, if we can count how many waves we have in this market, here we have the impulse wave, we have the corrective wave, we have the impulse, we have the correction, we have the impulse. Okay, so the lowest point now is this level right here. The support, the key support structure right here is this point. We also have this one as well. Okay, remember that the support level must always be respected. The support level must always be respected, but the resistance for an uptrend to continue moving in this direction, of course, the resistance has to be broken. It's a normal thing. The resistance has to be broken. This is the resistance right here. It has to be broken. You can see it always has to be broken. But the support structure must be respected. Any attempt for the support structure to be broken, it actually signifies that this market is ready to change direction. Just as we had on GBP USD, I'm sure you guys are aware of that. You can see that we also change direction. Okay, and this is the reason why, even if you analyze the market during the course of the week, or let's say at the beginning of the week, like today now on Sunday, as time goes on, let's say by Wednesday, market can change direction, of course, right? But we always have to be open-minded when we are doing our analysis, and we also need to be ready for any changes, right? We always need to be ready for any changes, because anything can happen in the market, right? Because if you look at this market right now, of course, some traders who would have been placing a buy around this entry level right here, right, would have probably been thinking that this market will continue in this direction to the upside like this. You can see something like this. This is what the person is going to actually have in mind, right? Of course, the trader is not wrong actually, right? It's not wrong, because you can be in a wrong side of the market and then you still make some profit, right? But the most important thing is we understanding that market can change direction, and we always have to be prepared, right? We always have to be prepared. So there's something called trade management, which is something that I've always been telling my students. Trade management, sometimes when we place a position on any pair, most traders, what they do is that they only anticipate market to continue moving in their favor. So if they open a trade, let's say today is Tuesday, and they place a position on a particular pair for a sell. Now, if their risk reward is 1:2 or 1:3, so let's say their stop loss is 40 pips. So here I have 40 pips on my screen. So if their stop loss is 40 pips, so the 1:1 is to risk 40 pips to make 40 pips. Okay, 40 pips. So this is 1:1. And for 1:2 is to use 40 pips stop loss to make 80 pips. This is 1:2. Okay, so sometimes when you're anticipating a big move like this, 1:2, right, you might want to hold your trade for as long as you want. Usually it's not going to be a few minutes. Okay, it can take hours, if not days. So market might not even move up to this 80 pips within a day. So it might take the market like 2 days or 1 day, 2 days to actually give you this 1:2. So in this case, you always want to do a trade management. Okay, so you managing your trade. I mean, would you actually have an investment and then always hoping that the investment keeps giving you profit without not managing them? Of course not. When you have an investment, it could be a physical investment or a digital investment. You always want to make sure that you are managing those investments properly, so that any investment that does not seem to give you what you want, you can just close it off. Okay, so during this trade management, when you open a trade and then you see that this market still has the tendency of moving in your favor or continue moving in your direction, of course you can hold your trade. Okay, you can hold your trade. But if you see that this market does not really have this capacity to move in your favor, then you can actually close your trade, because sometimes most traders always leave their losses for a longer period with the hope of market turning from these losses into profit. right? But there's a saying that we traders should cut our losses short and then let the profits run. So if you're in a loss, of course, I understand that if you're getting to risk 1% of our accounts, then we can actually hold the trade even if the markets want to approach our stop loss. Let's just do so. Well, that is fine, but not in all cases. There are sometimes that some losses we should have been avoided earlier on before it approached the stop loss, because there are so many occasions where I'll see a market heading to my stop loss level, and by the time I do some analysis, I will actually find a reason why I should have exited on this particular trade before it approached my stop loss. Okay, so that way, if I were to lose 40 pips on this trade, I would have exited that trade uh, probably around 20 pips or 25 pips. So I won't lose a whole 1% on that trade. Okay, so this is the advantage of trade management, and this you can see that this is actually a 1:2 movement. Okay, I'm sure you guys are learning something today. All right, so you can see that here, like I said, we have this point low support structure, and this is another one right here. And if you look at last week trading session, price were very, very bearish for last week. And if we check the weekly time frame, okay, let's check the weekly time frame. So you can see weekly time frame. For last week, we went bearish. Last 2 weeks also, we went bearish. Okay, so it is wise. It is a wise thing, right, to for market to continue in this momentum. We could actually still see price pushing a little bit to the upside and then continue back to the downside. But we are expecting price to actually close for the week bearish. Okay. Okay, let's go back to the daily time frame. Okay, so you can see that here we actually had a breakout of the support level. You can see the support level, we had a breakout already. We had a strong breakout. So we're expecting price to actually give us some, a pullback. All right, so we're expecting price to give us some pullback and then continue in that direction. So you can see, so they're similar to what GBP/USD was given to us. So we're expecting price to give us some little retracement. Okay, similar to the previous one, and then a continuation. And we can actually still see price uh, breaking through. Usually, when we see something like this kind of channel, this is a channel, this kind of channel like this, price always retrace it fully, like a full retracement. So we can actually see something like this. You understand? And then it comes back to this major support level, and then continue to the upside. Okay. All right, so guys, because of time, so I'll just have to switch down to the next market. So in case if you have any question, feel free to drop your question on the comment section so we can actually work things out. So for GBP card, pounds and the Canadian dollar, we're expecting more push to the downside, more continuation to the downside based on several uh, market reasons. Okay, and I would advise you all to join our Telegram channel. The link is actually in the comment section. join our Telegram channel so you don't miss any of our upcoming updates. So the next one here we have the Euro NZD, the Euro New Zealand. So we're actually anticipating for more selling opportunity. All right, so this is the daily time frame, and following up with the trend with how the market is moving. And remember, I said that market move in phases and cycles, right? So I said that during at the beginning of this session, market moves in cycles. So if one cycle is ended, another one resume. Okay. So if you look at the overall direction here, so we have price moving to the downside, giving us a lower high. This is lower high, lower low. We have this lower high. We have this lower low. Price gives us give us this lower high, and then we're expecting price to give us another lower low, right? So at least in the downtrend, this is an example of a downtrending market. You can see, although on the higher time frame, I mean on weekly time frame, it seems to be a correction, right? So let's go to a weekly time frame. So you can see this is weekly time frame. So everything we have right now, because we are actually looking at it at a more bigger picture. This is an uptrend, right? This is an uptrend. This is an uptrend right now, and you can see that here we have the impulse phase and this corrective phase. We have the impulse correction. We have the impulse, and here this is the correction. So you can see that we actually are trading the correction, but because this is higher time frame, okay, so it's actually going to be okay. And if we actually use our swing point Fibonacci from the swing low to the swing high, okay, so you can see that the target level we actually anticipating is our 61.8, and I'm sure you guys know how important that level is, 61.8 level. So looking at this trend, we actually expect price to continue in this direction more further till it gets to this support level, right? And remember I said that market move in cycles, so you can see that this cycle already got ended. So it's always good to know when a particular cycle has ended so that we can actually anticipate for the next one, right? Irrespective of the time frame you are actually seeing those cycles from. It could be on higher time frame, like monthly, weekly, daily, or on the lower time frames like 1 hour, 4 hours, 1 hour, 30 minutes, thereabout. Okay. So this actually got ended, and then it gave room for this upward movement to continue. You can see. So this upward movement would be regarded as a correction. Okay, would be regarded as a correction, and the correction actually got ended. You can see that we had a double top formation, and then it continued to the downside. So it got ended, and then gave room for this downward push to resume. Okay, so you can see it's resumed, and then it got ended after we had the break of the structure, and then we had the continuation to the upside. All right. So if you look at what is happening right now, okay, so let me just have to delete this. So if you look at what is happening right now, we had a break of this structure right here. So usually structure breakout are very important in the market, because initially we would have considered this as our impulse correction, our impulse, our correction, and then impulse. Okay, so it was very wise for us as a trader to expect price to move a correction and then another impulse. But if you look at what happened, we actually had a breakout of the structure. What that signifies? It actually says a lot. Okay, and this is the reason why when we try to use a robot, sometimes it's actually not even sometimes, like majority of the time, it will always put you on the wrong side of the market, because the robot will still be thinking that the market is still on a good sell. Okay, I've seen a particular robot that was projecting a buy when a particular market condition has changed. Now, if the trader who were using that robot would have been on that market, it would have actually got to know that this condition of the market has changed. Now, market condition can change at any time, so your professionality is what will help you, right? If at all this okay, let me clear of this. So if at all this price action right here, because here we are in a deep sell, which means that the sellers are in control of this market right now. Okay, so as sellers are in control of this market, what should we be doing, right? Are we going to be buying or selling? The majority of the activities that are happening in this market is the sellers, pushing price more further to the downside. That is the activities going on right now. We have so many selling pressure than buying pressure. Do you understand? A lot of activities are directly on the side of the sellers, not the buyers. So to actually make some decent amount of profit, you have to always consider going with a trend. So in this trend right now, it says that the sellers are in control, and it is very wise for us as a trader to actually be on the sell trade, but we have to get in at the right time. Okay, this is where our patience needs to be in place. Okay, so even if at all this market condition has to change, then of course I'll be able to know that on time, because remember that this is actually a very strong support. You can see the support level, so we could still see price trying to break through, and if it fails, we could see price move to the upside. So of course, if once I see how the price action react on this particular support level, once I see that the sellers were actually finding difficulties breaking through the support level, then of course that can actually make me to change the course of my directional bias. But right now I am actually on looking out for a sell. But once I see how candlestick formation are reacting to this support level, but not just that, okay, not just that, we could still see price rejecting this level and then still see price breaking through again. Okay, so we always have to be prepared for anything. Okay, market condition can change at any given point. All right. So, but still on that, we are actually still expecting price to break through and make its way down to this 61.8 level that we found on weekly time frame. So you can see, and okay, like I said earlier, we had a structural breakout, and then we had price made a breakout, and then we tested. You can see that it didn't actually break through the support level. So we had our impulse, we have our correction, we have our impulse. Okay, so during this impulse, we have the smaller ones. We have the impulse, correction, impulse and correction, impulse, correction, and impulse. Okay, so the major structure we had was this structure right here. Sorry, was this particular structure, and then we had a break of the structure. So this was the confirmation that this upward movement has ended, and then we are resuming back to the next direction, which is the sell direction or downtrend. You can see. So market moving cycles, we have to know that. So let's go down to the 4 hours. So here on 4 hours, you can see that here we have so many opportunities where we could have gotten in a trade for a sell, because why? We have sellers in control of this market. Okay, we have sellers in control of this market, and they are actively selling. Okay, actively selling. So we had the support level. This is a downtrend, which means every support level must be broken and the resistance must be respected. So this is the support level and this is our resistance. So this resistance must be respected. It has to be respected and not to be broken. So you can see that here we are the breakout, and a retest of the broken structure, and also a retest of the trend line, then a continuation to the downside. Okay, so we're expecting a continuation to the downside thereafter. So for Euro NZD, we are expecting more opportunities to the downside. And if this condition of the market is going to change, of course, we are going to let you all to know. So you have to join our Telegram channel. The link is in the description, in the comment section. So you guys have to join. Okay, so if you don't want to miss any of our opportunity, we also send signals. We actually wait for the right moment, and we often don't send any out signals because we have to wait for so many confirmation, and this has actually helped us a lot. Okay. All right, so the next one, we are not going to touch all this analysis because of time. We are not going to touch on all this analysis. So I'll probably just stop on one of the markets, and then tomorrow we are going to continue from the next, from the rest of them. So AUD and ZD. All right, so this is AUD and ZD. As you can see, we have a direction. Okay, we have a direction. So I think you guys, if you are analyzing a particular market and there is no clear direction, it is always best to stay out of that market. I mean, there is no point of trying to force out some analysis, when the market itself is not, in a good condition, right? So there's no need to force out any analysis. So we had a clear direction. Let's go to daily. So this is daily, and you can see. Okay, so let's go down to the weekly, so you can see the much bigger picture. Okay, so this is weekly, and if you can see, last week actually went bullish, and you can see that where we are most likely having a consolidation, right, between two levels, which is the support levels and the resistance level. So here we have the resistance level respected and the support level, back to the resistance, back to the support, and then back to the resistance. So you can see, so from the resistance now, we're expecting price to come back to the support. Okay, to come back to the support. And if you look at what is happening, this is actually a correction, because a correction can come in different ways, right? A correction can come in different ways. So in an uptrend, we could actually have a bullish flag like this, or a symmetrical triangle. I think we saw a symmetrical triangle on one of the markets. I can't remember. So we could also have a range horizontal formation like this. So a pullback, because pullbacks are necessary in the market for market to gather enough of volumes, enough of orders. So these pullbacks are what the market uses to get enough of orders, right? These orders are used are being used for the market to move. Okay, it's like fuel, a vehicle needs to have this gas for the vehicle to move, and in the market also needs these orders from traders. Okay, the reason why it needs all these orders is because some people would have started buying from here, right? Some people would have started buying from here, and once they buy, not all traders has the patience to hold their trades for a longer period, right? So some people would have actually closed out their trade at around this resistance. So when there's a lot of people closing out on their trades, then it's actually caused the market to make a pullback. Okay, because once you close your trade, of course, you are automatically selling it back to the broker. Okay, so it caused a pullback to a downside. So now, because people are living out on their trades, if they were about, let's say, $1 million worth of buying pressure at around the support level, now because people are closing out on their trades, then this $1 million is not going to be active anymore. It would have reduced actually. Although we have different kind of traders, like I said, some traders don't have the patience to hold their trade for a longer period. Some also do have that patience. Some can hold their trades for at least 1 week, 2 weeks, thereabout. Some traders are swing trading. They are swing traders. Okay. Some are day traders. Some are scalpers. So a swing trader will still be on the trade for a longer period for a much higher profit. Okay, but if you look at what is happening, some traders would have closed their trade around this level, so the remaining left from this major support would actually have reduced from 1M back to, let's say, 200K, right? So that 200K are still there are orders that are being held by the swing traders. So that orders is not enough for the market to actually um, move. So with the help of this pullback, it creates another buying opportunities again. And this is the reason why even those guys that placed their buy from here and then they went out of the market around this level, they can still resume back again from this level. I mean, to add more to their position or to open a new trade. Okay, so if there are a lot of people buying again around this level, it's going to increase the amount of buying pressure. So the amount of buying pressure right now, sorry, may have actually increased to, let's say, back to 1M or even more than that. And then the market can actually move in that direction. Okay. So the pullback actually can form in different ways. So you can see we have this horizontal, which is a ranging market formation. So the one we have in this market, this is weekly time frame. This is higher time frame actually. So of course, yeah, this correct. This consolidation. This is an example of consolidation market. If any of you guys are new to trading, we have different kind of direction in the market. We have major three, I mean four, right? Although the fourth one is not really that relevant, but we also still have to know. We have four different kind of direction, which is the upward movement, which is an uptrend, the downward movement, which is a downtrend. We also have a ranging market, which is this example right now where price is moving between two levels of support and resistance. You can see. So this is a ranging market, and we are always anticipating either a break to the upside or a break to the downside, right? So the last one, which I mentioned that it might not be that relevant, is the chopping market. So the chopping market is when you are unable to determine if price is in a downtrend or an uptrend or it's even ranging. You are unable to determine those kind of markets. You cannot really put a finger to if the market is moving in an uptrend or a downtrend or ranging. Then those kind of market are considered to be a chopping market. Well, in my experience, chopping market can actually cause some traders to lose a lot of money, right? Because when you don't have a clear direction, right, that means the market can actually put you on the wrong side. The market can actually make you lose some money, right? So whenever you see a market and you're unable to determine those direction, then you want to stay out of those markets, right? So it can actually appear on any time frame. It could be on monthly, weekly, daily, 4 hours, 1 hour, irrespective of the time frame. It can appear. So if you find a chopping market on your entry time frame, you have to stay out of that market. or probably you have to be patient for the market to give you a very clear direction. So in this market, we have a ranging market, and you can see for last week, which is this candle, you can see last week was bullish, right? Last week got bullish. Guys, I can see your messages, so don't worry, I'll respond to them. Okay. Wisdom, okay. On gold, okay, no problem, no problem. I will check gold out for you. And Milton, I think we have head and shoulder pattern on daily. All right, thank you for that insight. I'm going to check that out. Okay, Yusuf, analyze USD card. All right, I'm going to check that out also. But I'm not sure if I have USD card on my watch list. Let me check. Okay, I don't have USD card, but I'm going to check it out for you. Okay. So after checking, this direction, we had a structure breakout around this level. You can see we had a structure breakout. Of course, it's not really visible right now. I mean, it's not really that visible right now on weekly. So this is the reason why we have other time frames. So these time frames are working hand in hand to give us a clear direction. Okay, to give us a clear direction. So we have a structure breakout at around this level, and it's a wise thing for the market to to go ahead to retest. So for the whole period of 1 week, market use that to retest this broken structure. You can see this broken structure. I'm sure you guys can see this clearly. Let me try to zoom out a little bit. Okay, so you can see for a whole period of 1 week, you can see this is weekly time frame. For a whole period of 1 week, which is 5 trading days, Monday to Friday, price used that to retest this broken structure. And you can see after the breakout of this broken structure here, you can see price has been bearish, right? Some weeks we closed as a bearish candle. Some, you can see this is a doji. You can see that this was bearish and this was bearish. You can see, so price was very, very strong with the bearish movement. Okay, but last week was different because the whole of the 5 trading days were held to be a retest of the broken structure, right? So let's go down. You can see we also had a rejection, so we need to also pay attention to this rejected candle. Okay, so the buyers actually tried to push price. Actually, they gained enough control actually to push price to retest this level. If buyers had their chances, of course, they can actually continue pushing price to the upside. But of course, at every resistance there are sellers, and at every support there are buyers. Okay, I want you guys to have that in mind. So this was a resistance, previous support turns resistance, so which give to us that this is a very strong structure. Okay, this is a very strong support and resistance structure. All right, so after the breakout we had a retest. So the sellers around the structure were actually actively involving in this market, and they pushed price to the downside. Okay, just a little bit, we had a weak rejection. You can see a weak rejection. So let's go down to the daily time frame. All right, so on daily time frame you can see that so you can see that this is the broken structure I was talking about. You can see the broken structure. So it is very, very important for us to understand that. And here we can see that we had a very long impulsive move and a correction, and a very long impulsive move and a correction. So usually this was meant to be a correction and then a continuation to the upside. But unfortunately, we had a very strong breakout, which was this candle. So price actually broke out of this support level, and that automatically seems that this upward movement has ended, and then we are actually resuming back to a downtrend. So this is how a change of trend appears from uptrend to a downtrend. You can see how price shifted from a downtrend from here back to the uptrend, right? And thereabout, I mean, if you look to the history of the market, it's also the same thing. Okay, so we had a structure breakout around this level, and then price, change direction to the upside. We also had a structural breakout right here. Just that this doesn't have a retest. You can see. So, I mean, the more you analyze the market, the more you are going to understand some things about the market. This is the reason why the best way you can actually learn the forex market is to be actively involved in the market. I mean, you can actually read, you can have different kind of books on your smartphone or on your laptop, and you might not still be a professional trader. This is the sad truth. You can have hundreds of books and you can be reading them every single day. I'm not saying reading is not good, but all those things that you are reading, put it into practice. Some traders would consider reading a particular book for as long as they want, and hoping that by the time they are done with the book, they are going to be a professional. I mean, this is not always the case. You have to make some practice. Forex market is a skill-based profession, right? It's a skill-based profession. It is your skill that will determine not the theoretical aspect of trading, but the practical aspect of trading, right? So it is your skill that will determine. Now, if you look at this, broken structure, we had a breakout. But if you look at our price, although we had a retest actually, and the retest can be visible um, on the lower time frame, right? Because if you look at this some bearish candle right here, if you look at some bearish candle right here, you see that it's actually a retest. But we never had a longer retest, something that happened like this, and then a continuation, right? So this is actually, I mean, for you to understand this, you must actually have analyzed the market yourself, experience all those things all by yourself. And this is the reason why experience is not something you can actually buy. It's something that you have to go through. Some things you can't actually buy, and experience is one of them. Okay, so right now we had a structural breakout and we had a retest. Okay, following up with how the market has been moving from this level. Okay, so here we had our impulse, we have our correction, we have our impulse, we have our correction. We also have our impulse right here, our correction, and then impulse. So it was necessary for us to have a correction, just as we've been having earlier. We also have a correction and a continuation to the downside. But if you look at what is happening, here we had a structural breakout, but it doesn't really mean a change of trend, because this is where most traders get to be on the wrong side of the market. They always think that, okay, this is going to be a change of trend because we have a structural breakout. No, it's not always the case, right? We are going to consider everything right here in this cycle as our impulse. Okay, so this impulse has completed its phase. Okay, just as let me try to look for, okay, just as we had on this situation, we had this impulse, right? We had this impulse, and then we had this correction. You can see, so this correction, and if you look at it, we have this impulse, correction, and then we have this impulse. And if you look at this impulse, during this impulse, we also have the smaller ones, which is this impulse and correction, impulse. So initially, we're meant to have a correction and then a continuation to the downside. But if you look at what happened, this correction actually turned to be another impulse, right? But we also need to understand that the major high, which is this major high, this major low, okay, this major high, this major low, this major lower high, and then this major lower low. So even a breakout of this resistance here doesn't mean a change of trend, because we could actually still have something like this, and the price continues to the downside. Okay, price continues to the downside. The market is still very right, even after the market has broken through the structure. So the reason is because if you look at the major high, this is the major high, this is the major low, this is the major lower high, this is the major lower low, and then this is going to be the major lower high. You can see that this high has not really broken out of this major high. So it is still very, 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 very valid. Okay, it is still very, very valid. So here we add our impulse, we have our correction, we have our impulse, we have our correction, and then an impulse. But in this case now, in this case, this is the reason why we always have to understand the market direction. We add our major high right here level. This is the level, and then from this breakout of this level right here, price pushed up, and then we also add a breakout. It's a sign that the market is changing direction, right? Because from the breakout here, we add more buying activities. Like, price has been very, 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 very bullish, right? So if we look at what is happening right now in this current market, we actually have, let me delete this. So we add a breakout of this level, this resistance level, but it doesn't mean a change of trend, because some traders will still be thinking that this is going to be a change of trend, something like this, continuation like this. No, it doesn't. It's not the case. Okay, so this is going to be our impulse, and then it's going to be our correction. Now, this correction is still very much active, so this is called our correction, and then we are going to have a continuation to the downside. Now, the correction is still active, like I said, it's still very active, and a professional trader will always know when a correction has ended. The correction is what gives us the opportunity, isn't it? Right? Because after this correction, after this market has given us this correction, right, we were able to look for a buying opportunity, which actually warranted us to buy, and then we took this opportunity for a buy. You can see the market actually went to the upside. Okay, so the correction are what gives us trader the opportunity to enter the market. Okay, so before you place any position, you have to make sure that you get a correction or a pullback, right? Don't chase candle. Okay, so you can see that last Friday candle, this is daily time frame. Last Friday candle, and even on Thursday, we had the Thursday candle. You can see that we had a doji at the resistance, the doji, and at the same time, this was on Thursday, and on Friday we also had a rejected candle, right? So these are signs that price may actually want to continue to the downside. Like I said, may actually want to continue to the downside, but we are not yet sure. Okay, so let's go down to the 4 hours. Because of time, we've actually spent, I think we spent about an hour already. So thank you guys for staying with us, and I hope you have, or you are learning some things with us, right? Okay, thank you very much, Yusuf. Thank you. I do appreciate. Okay, so like I said, we are currently in a pullback phase. This was the moment where price actually made a breakout. You can see moment where price made a breakout. But that doesn't mean that price is going to change direction. So now here we have our phase one. Every correction must actually give us minimum of 3 waves. We have wave 1, wave 2, and wave 3. These are important tips that I'm giving to you guys. So minimum of 3 waves the market needs to have. If you look at this correction, this is a pullback. How many waves do we have in this market? We have wave 1, wave 2, and wave 3. So minimum is 3 waves, and then we had the continuation. So I could have placed my trade with a good risk management, and then I'll make my profit. And if you look at this pullback as well, we also have 3 waves. We have this wave 1, wave 2, and wave 3, and then the continuation, right? And if you look at this correction as well, we also have wave 1, wave 2, wave 3. This actually gave us more than 3 waves, but it's fine. Like I said, the minimum is 3 waves. So we have, sometimes we could actually have more than 3 waves, like wave 1, wave 2, wave 3, wave 4, wave 5, wave 6, wave 7. It can actually continue going as long as it wants, okay? But the minimum is 3 waves, okay? And after a structure breakout, it's a moment where price wants to continue in that direction. All right, thank you. Okay, so so you can see here we even add a pattern formation right here. If you guys are familiar with your double top formation, this is a good example. We had the top 1 and the top 2. I mean, there are some moments in the market where price will give you a very good opportunity, but only a professional trader, I mean, if you are well experienced, you're able to know all those things. Okay, so we have, like I said, we need minimum of 3 waves, and here we have wave 1, wave 2, and wave 3. Now, if you look at the distance between the wave 2 and wave 3, it's very, very, very high. I mean, it's very, very high, okay? The distance is very, very high, so I won't be going ahead. So if I, normally I'll be waiting for a structure breakout, but imagine when you're waiting for price to actually come back down before you place your trade. I mean, that'll be a late entry, okay? That'll be a late entry. But what I'll be expecting from the market is two possible things, because on the daily time frame, remember that Friday candle closed as a rejection. Thursday candle actually closed as a doji. Okay, so by the time market opens today, which is Sunday stroke Monday, we are going to see how market is going to react at this resistance level. Sorry about the drawing. At this resistance level, okay, so you're going to see how price is going to react, and because this is a structure, okay, so I'll still want to exercise patience. Okay, patience is the key, right? And if you guys don't know yet, you should know that patience is, I mean, forex is a patient game. If you don't have that ability to exercise patience, then you are always going to be on the wrong side of the market, right? Because if you decide to place yourself at this level right here, I mean, the market can still go up, and it's very, very right. If the market goes up, then the market is very right, okay? The market is very right, because you as a trader, you are entering the market at the wrong time. Because why? This may be a retest, right? This may be a retest, a breakout of the structure, a retest, and then a continuation. And this is the reason why I said that this correction is still active, because we could still see price even giving us something like this, and then continue to the upside. Okay, so at this moment we want to exercise some patience, right? So what I will be expecting from the market is to have something like this, a retest, and then price tries to break resistance, and then a breakout of this level. So this is going to be a double top formation. We have the top 1 and the top 2. Okay, like I said, market condition can always change, right? So we could also still have price giving us a retest and then a continuation. We had a breakout like this, and then price still comes back down. Now this is going to be a safe opportunity, because we have broken out of a structure right here. You understand? We are broken out the structure, and then we are going to place a trade after a retest and then a continuation to the downside. And at the same time, we could also still have price giving us some head and shoulder pattern, something like this. There are so many opportunities that can arrive, and this is only when you are able to exercise patience. Okay, and if you don't want to miss out any of those updates, right, because I'll be sending those updates on Telegram. Find the link on the comment section to join our Telegram channel if you're not on our channel yet. Okay. All right. Thank you very much, guys, for being with us. It's over an hour already. So, like I said, we are not going to touch down on all the analysis, all the pairs we have. We have quite a number of pairs here. Next one is JPNZD. And at the same time, I would like to touch down on gold and USD card, right? All right, so GBP NZD. So I was watching out for this market last week, and it actually gave some good opportunities, some good profit on those markets, and a continuation to the downside is expected, right? A continuation to the downside is expected. So let me delete this. Okay, so so this is daily time frame, and as you can see on daily time frame, this is a very clear market. You can see, and on daily time frame, you can see that we have. Okay, let's go down to weekly. Okay, yeah. So this is on weekly. So sometimes when a particular market direction is not very clear, it's necessary for us to actually approach the next higher time frame. Okay, so we can actually have a more clearer picture. Okay, so this is weekly time frame, and it seems to me that we have an uptrend, but this is a long-term view. Actually, this is a long-term view, and we have, you know, a little bit of uptrend right here. You have this impulse, this correction, and price is actually on its way to make another impulse to the upside. Okay, so what I will actually consider here is this major resistance right here and this major support. Okay, so going down to the daily, and if you let's check the weekly time frame. Let's see how last week performed. So as a trader, it is very important for us to always have an idea of this candlestick formation, right? So on the weekly time frame, so you can see that last week candle closed as a gravestone doji. Okay, gravestone doji. I'm sure you guys are familiar with that. If you guys are familiar with that, then you should understand what I'm saying. So we have a gravestone doji, and before that, last 2 week candle was very bearish. You can see last 2 week candle. This is last 2 week candle. I mean, it was very bearish. And if you look at last 3 week candle, this candle, it was bullish. So which means we had a bullish candle followed by a bearish candle. What does that say? It actually means that we are the last 2 week candle has engulfed the last 3 weeks candle. Okay, so this candle right here that I'm pointing at has actually engulfed this bullish candle, right? And this means that the sellers have overshadowed or have overpowered the buyers. Okay, so it is necessary for the market to continue in this direction to the downside. Okay, to the downside. And at the same time, we also still have to pay attention to what we have right here. This is a correction. This market right here, this is a correction, right? And this is going to be a continuation to the upside, which is an impulse. So everything right here is going to be an impulse. And inside of the impulse, we have this impulse and correction, impulse and correction. So right now, what we are trading is just a correction. This is a correction right here. Okay, but we are expecting this correction to continue until it gets to this level. I mean, I don't think the market would want to break below this support. Okay, because this is the major higher low, and then we could have something like this. We have this high, this low, this higher high, this higher high, and then this higher low. So now this higher low that is currently in motion could actually get to this level and then continue to the upside. Okay, and if you look at what we have here, we also have this, a breakout of this major structure. Okay, and this is more like an head and shoulder pattern where we have our head pattern, we have the left shoulder and the right shoulder. Okay, so a breakout like this we had right here, and a retest. So this retest can actually continue until it gets to this level and then continue to the upside. Okay, so this is what we are expecting. Let me undo this. All right, so heading down to the daily time frame. I mean, I'm trying to show you guys the reason why this market should actually sell, and you guys can actually get it added to your watch list so that you don't miss on this market. If this market interests you, then you can actually add it to your watch list. So right now you can see that during this impulsive move right here, like I said, the market move in phases or in cycles. So you have to be aware. So here we have our impulse, correction, we have our impulse, we have our correction, we have our impulse. Okay, and at this time, this is a very strong structure right here. Okay, so this is a very strong structure. You can see right there. This is a very strong structure. So we had a breakout of that structure, and that gave sellers more avenue to step in, because initially the buyers were in control. You can see when market is in an uptrend, the buyers is always in control. But right now we had a breakout of the structure, and the sellers are now resuming they are gaining power. Okay, so right now you can see that we have actually been retesting this level. This is the second time of retesting this level, and then this is the third time. So here we had this correction, and then we can actually have a continuation to the downside, something like this. Okay, so but for now, this can actually take a lot of time to fully form. I mean, the market can actually come back here to this level of support this week. I mean, I can't really say, but it can actually happen within 1 week. Sometime might actually take 2 weeks. Okay, but we are also coming to an end of June. So we actually going to see, and this is the moment where the monthly time frame is going to be very, very important. Okay, so that we can actually see how this month, which is the month of June, has performed on the monthly time frame, so that it can actually give us an idea of how July is going to be. Okay, because this candlestick formation are very, very important, most especially when it is found on higher time frame. Okay, candlestick formation is the language of the market. So for you to understand price action, you must also understand candlestick formation, and chart pattern is the direction. Okay, so both candlestick formation and chart pattern are very, very, very important. Okay, so heading down to the 4 hours, and you can see we had so we already we had a position on GBP NZD, and we took out our profit already, as you can see. So we're still expecting price to continue more to the downside anyway, and at the same time you can see that here we had this impulse correction impulse. So we could still see price moving to the upside to make a correction and then a continuation. Okay, so the moment where price actually gives us this uh, push to the upside like this, I'll be interested in selling. Okay, adding more to my position. Although I am out of the trade right now because sometimes I don't hold my trades over the weekend. So I will be very glad to actually place a sell position, right? I'll be very glad to place a sell position after you can see that here we're having something like this. This is 1 hour actually, and this is the time frame that I always look forward to enter the market. Okay, so we could have something like this. So remember that in a correction uh, or in a pullback, we always anticipate minimum of 3 waves. So when there's no minimum of 3 wave, then I am not going to trade that market. Okay, I am not going to trade that market. So this is a pullback. You can see, and we have 3 wave formation already. We have with one, with two, and with three. Okay, and everything right here is also a pullback. And at the same time, we have our wave one, wave two, wave three, wave four. In fact, this is wave one, wave two, wave three, and everything here is wave four. Okay, so wave four can turn out to be the next impulsive move because everything right here is correction. All right. Okay, I hope you guys were able to gain some things here. So if this interests you, you can actually add it to your watch list. So I'm expecting GBP NZD to continue selling. I think I have a lot of GBP pairs on my watch list this week. Okay, so for GBP CHF, okay, because of time, right? I think I have to just switch down to just okay. Let's check on gold. I think I during the course of last week I made a projection on gold. Hold on a second. Okay, so I made a projection. All right. I'm sure you guys can hear me properly. So sorry about that. Okay, so based on what I was explaining the other time, I said for gold we actually had a sell projection which was sent on our Telegram channel, and here was the reason. This is actually on 4 hours. So this is actually on 4 hours after doing some technical analysis. So let's check daily. Okay, so you can see on daily, so we have a very strong uptrend formation, as you can see. So we have an uptrend formation giving us this impulse correction. We have this impulse, right? So we will consider this as a correction, and at the same time, you can see that during this period, price actually respected this resistance. I mean, I could actually remember this period where price actually respected this resistance, and you can see this resistance here. This actually seems to be like a double top formation. You can see a double top formation, and we also have this support level right here, major support level. Okay, you can see. So I found this, and so I found this. So we have a uh, although market is still in an uptrend. Okay, it's still in an uptrend because we could still have something like this, a push to the downside and then a continuous to the upside. So it could be in form of a ranging from this high to this low, from this low to this high, from this high back to this low, and then back to this high. Okay, so we always have to be open-minded, especially when we are analyzing. Okay, especially when we are analyzing the market, we have to be open-minded. Okay, so this is daily, and you can see. Okay, so let's go back to 4 hours. All right, so this is 4 hours time frame, and you can see that here we are. Like I said the other time, market moving phases, so we always have to understand that. And during this phase, we have this, this trend, this downward movement. Okay, this downward movement, and then during this downward movement, we have this impulse and this correction. We have this impulse and everything right here is our correction. And we could also still expect price to give us another impulse, okay, to the downside. So, well, for the person who asked for the analysis, all right, so I am actually expecting more push to the downside, right? But we still need to wait for several confirmation. Okay, we still need to wait for several confirmations. Let's go to the 1 hour time frame. All right. So this is 1 hour. So I guess we are going to be ending this live stream very soon, and tomorrow we are going to come on live again, and then we're able to give you guys the rest of this market analysis. Okay, we're going to be able to touch down on all this market analysis. And if you're not yet on our Telegram channel, feel free to do so right now so that you guys don't miss any of our updates. And okay, so this is what we're expecting. So price action was actually around this level when we projected a sell. And okay, so here we had the impulse, you have this correction, you have this impulse, you have this correction. So we have this impulse, and this is a correction. Okay, so we are still expecting. The market is not giving us a clear direction yet because we could still see price moving to the upside, and at the same time we could still see price moving to the downside. Okay, so we have to be extremely patient during this moment. So we have to be extremely patient during this moment. All right, so yeah. Okay, so we could still have price, pushing up, pushing to the upside, giving us a pullback like this, and then a continuation. Okay, so for this market, I'll still be extremely patient. This is gold, so you have to be patient to to wait for the right moment to enter the market. So I'll wait for a pullback, and if this pullback continues, because there are sometimes this pullback might actually continue to the upside, so we could have something like this. We could have something like this. So we are going to also wait for the right moment, okay? And here, this is going to be a double top formation. You can see. So we are going to be very, very patient for this market. Okay, so for the person who requested for the analysis on gold, I would want you to join our Telegram channel. I'll also be adding gold to my watch list so that I can give you guys more updates on it. Okay, so thank you very much, guys, for making time out to join this live stream. And I would also like to tell you guys that our normal live stream is actually back. Remember that we actually paused the live stream for a little period of time, and this was due to the project I was working on. And I would also like to tell you that the live stream is back now, and we are going to be holding our live stream as usual. Okay, so you guys should be prepared. We have a lot of information to give to you guys. Okay, we have a lot of information. So if you don't want to miss out on this, please join our Telegram channel, uh, like our Facebook page, and always engage on our post so you don't miss any of our updates. And all this information that we are sharing on our page are very, very important. It has helped a lot of people. Uh, it has helped a lot of my students, a lot of people on my channel. Okay. Uh, Thank you very much once again. Thank you so much for joining the live stream. I appreciate you guys for your time, and I hope you guys learned a lot today and you're able to gain some things. I'll see you guys tomorrow. Have a wonderful weekend.